Hello everyone and welcome to my channel. Today I'm going to be talking about how I entered an options trade with a certain view in my mind and how it went terribly wrong and what all actions I took to get out of the strategy with minimal loss or profit. So without further ado, let's get started. So I'm going to be starting by showing what happened on the 30th of August, that is 2 days before the day I'm recording this. So market was moving in one way direction and there was no significant fall at all. You can see you can practically draw a line from open to close of the day. So that day it opened at around 17,400 and closed at around 17,700, 17,800. By looking at this, during after about 3 p.m., I thought with no significant fall in the day, I thought that the next trading day, that is on Thursday also, it was gonna shoot up. That's why I wanted to get into a bullish strategy. Now, so let's get to what I started with. So this is what I started with. What I did was I wanted to buy a call option. But as you know, naked buying is not a good strategy. And I'm usually an option seller, so I would like to avoid a naked buy anyway. So what I did was I sold 10 lots of 17,000 put options at 5 rupees. And then I sold a spread, a bull put spread. So 17,500 put, I bought as a hedge, and then 17,600 put, and I sold, both of which at 10x, which is 500 quantity. The price was, so I sold the 17,600 put at 33.45 and bought the hedge at 21.95. Um, so why didn't I do it at a far OTM price? Because you can see premiums will be very less. And so for my potential, I could sell these many lots of 17,500, 17,600 put, and then I had some extra cash. That's why I sold 10x 17,000 put, which is quite far away, and I knew it's not going to break in one day. Then I collected some premium with this, and I used all the premium in buying 7 lots of 17,900 call option. The payoff chart will look something like this. Um, so on August 30th, it was around 17,800. That is where I've kept the spot for now. As you can see, this strategy is a no credit, no debit. I collected only about 100 rupee premium, but if market doesn't go anywhere, then I'm not in profit or loss. If market goes low, I might make some loss here, and if market goes very low, then I will make a lot of loss. Right? And but if market shoots up beyond 17,900, I'll start making proportional profit. This was the view I had in mind on August 30th. Also remember, August 31st was a holiday on account of Ganesha Chaturthi. So one day of worrying less. Now, so let's see what happened on the next day. Right. So after Ganesha Chaturthi, to my horror, on account of US markets trading in a very bad state, Indian markets also opened with a huge gap down. So previous day's close was around 17,740, and on the expiry day it opened at 17,485. That is like 250 points gap down. Okay, let's forget 250. In the first minute, it recovered about 50 points. So still a 200-point gap down. How would this look for my strategy? It looked like this. So from being somewhere around here, I came to around here. As you can see, so on full expiry, the loss would be 30,000, but I think I was sitting with a slightly higher loss also. And then, since the initial few hours of the market are very volatile, especially on a Thursday, I thought I would wait it out for some time, and that's exactly what I did for some time. Yes, so around 12:40 when European markets had opened, then I checked it back and index was still hovering around 17,600. It had recovered a bit, but it was in 17,600. That's when I decided to adjust a few positions. So coming back to Opstra, what I did first was 17,000 put and 17,900 call, which were almost worthless at that time. I squared them off. 17,000 was trading around 75 paisa. So I booked the profit here. And then 17,900 was trading around 1 rupee 35 paisa. I booked the losses here because what are the chances of in the remaining day it crosses 17,900, right? It would anyway go to zero. So I booked the losses here. And once I did these two, what would remain is a simple bull put spread, but it looked very, very horrible. Um, as you would imagine, because I have booked a lot of losses here. What I tried to do was, since I had, after clearing these positions, I had some capital free. I thought I would put an iron condor on top of these two. So what I did, I entered 24 lots of iron condor. Since iron condor is a completely hedged position, it will take lesser capital than naked selling. I sold 17,450 put and 17,650 call at 1185 and 1136 respectively, and 17,350 put at 2.8 I bought as a hedge, 17,750 call at 286. So this is how the payoff chart looks like. So why did I do this? Because without doing this, the max loss, let's say if market goes down, would have been about 50,000 rupees. But now, if market goes down, let's say till 17,450, my max loss is a bit reduced from 50,000 to 30,000. So that's a plus side. And also, my profit in the near upside region is also increased. So it was about neutral to 20,000, it increased, but there is a cost to this, of course. Earlier, I didn't have any upside risk. In fact, earlier I had a 17,900 call, so as and when market shoots up, I would make more and more money. But now, with the iron condor, I have risk on both the sides. But since there was only 3 hours of trading left for the day, I thought, okay, market won't cross this level, 17,670. That's why I did this adjustment. And at around 2 p.m., incidentally, Nifty reached its lowest point of the day at 17,480 around. And this was a moment when I got a little heart attack, because this is how I adjusted later. So what I did was, if you remember, I had all these legs, and I had entered this iron condor. So what I did was I booked the call side, because in the call side it had already, due to market moving lower, it had given me a lot of profit. So I booked the sell leg at 445, and I also booked the hedge at around 1 rupee 30 paisa. And after doing these two, this is how the payoff chart looked like. This is not a good payoff chart. So market was around 17,480, and even on maturity, on expiry, this would be 32,000 loss. But I was at that time sitting with around 60,000, 70,000 MTM loss. Then I didn't know what to do. But so uh, after seeing the markets helplessly for about 20 minutes, at around 2:30, it reached 17,520 again. So around 220, 230, when as I showed you, when the market reached about 17,520, 530, I decided to go a bit aggressive. So I booked the losses in 17,450 put. I booked it at, I think, 1869. So I booked around 8,000 rupee loss here. Now, since I have booked 24 legs of 24 sell legs, I wanted to also remove 24 hedge legs, or rather shift this 24 sell legs to a different point. So first thing I did was I booked the 17,500 put, 10 quantity that I booked around 39.23. So I made some profit here, which was equal to the same loss I booked here. And now, if you can see, this is I have a lot of put buy legs, so I can sell. How many extra do I have? If you count here, I have 10 sell legs and 24 buy legs, so I can sell 14 more lots. Since I wanted to go aggressive from 17,450, I shifted to 17,500. I sold 14 lots and I sold it at 40.45. So if you can see, okay, the spot was about, yeah, the spot was near about 17,540. And you can see I had converted my strategy into a simple spread, a bull put spread, wherein I have two hedge legs, or rather two sell legs. 17,600 put what I originally had put at 33.45, 10 lots. 17,500 put 14 lots at 40.45, and then equal number of hedge legs at 17,350 at 2.8 rupees. Right. And when I checked back at around 235, fortunately, market had gone up from 17,520 to 17,560, 570. And luckily, my position had become MTM positive. So rather than meddle with it further, I got out of it. I first I cleared all my sell legs. 17,600 was one sell leg. I squared it off at 53.33. Yes, this is a loss. So I booked around 10,000 rupee loss here. And then in the 17,500 put, remember I had sold it when the market was 17,520 and now it is 17,560. So obviously I would have made profit. I booked it around 944. And then the last thing that was left was the hedge leg. I squared it off at 1 rupee 35 paisa. So there you have it. This is how I ended the day. I So this illustrates you how you can enter some strategy with some view in your mind, but when things go terribly wrong, you can still do some adjustments. Obviously, this doesn't work always. And since I tend to be on the aggressive side, I could sell some aggressive puts, aggressive calls. And also I got fortunate and squared all the legs at some optimal times. Obviously, I mean, if you knew how the market, if you knew this graph uh, earlier, and then you can obviously make a lot more than this. But considering you don't know what's going to happen with the market, I think this fared out very well, and I was able to get out with minimal. In fact, I made some profit also, making about 11,000 with a capital of 10 lakh in a matter of 2 days. So that's 1% return, right? So it's not bad. So I hope you guys enjoyed it. Thank you for watching.